Hello everyone, I am Shubhangi Jain and in today's video I will discuss about the embedded finance. So let's get started. The COVID pandemic has led to the growth of digitalization and encouraged businesses to collaborate with fintech companies for expanding their revenue and customer retention. One such trend in this regard is the embedded finance. Now, what is embedded finance? Embedded finance refers to integrating financial services into a non financial service or business. Embedded finance infrastructure companies enable platforms and companies to offer financial services such as embedded banking, lending, payments, and investment entirely within their own apps or ecosystem through the use of APIs. Now, I shall discuss the factors responsible for the growth of embedded finance. First, buying behavior of the consumers. The emergence of the digitalization has led to a shift in the pattern of the buying behavior of the consumers, which resulted in the development of the digital platform economy, driving a consumer led trend that introduced new norms for the younger generations and changed the purchase habits of the consumers. Second, adaptation of the scheme. Consumers are keen to adapt and avail the financial services from non financial providers, especially the youth. The proof of this is the sudden rise of embedded payments and embedded investments within the country. The sole reason being that these new age finance providers have better UI and service experience than the conventional banking. Their efficiency and effectiveness has also been appreciated by the consumer base worldwide. Third, the need for a better customer experience. Embedded finance has the potential to provide a better customer experience with the help of the data provided by them. This encourages the customers, especially the millennials and Gen Z audience, find this model of settlement and payments very lucrative and convenient. What are the types of embedded finance? First, embedded payments. Embedded payments are defined as the integration of payments infrastructure to create a seamless flow within the platform or an app, the first financial service to be embedded in the non financial product experience, which has now become an essential part of the value proposition of any SaaS platform or e commerce app the customers are using intuitively on a regular basis. Some of the examples of embedded payments are e wallets, e commerce apps, payment by educational institutions, in game purchases for video games, subscription based payments for SaaS, ERPs, and much more. Another feature of the embedded payment system is the facility of payment in installments by the user, which is usually covered under the embedded credit segment. Second, embedded credit. As the name suggests, embedded credit means embedding credit products in non financial digital platforms. This helps the consumers in application, repayment, or acquisition of loans. One of the most familiar examples of this type of embedded finance is buying a product on EMI from the online shopping website. Third, embedded insurance. This type of embedded finance deals with combining insurance with the purchase of a service or product. The embedded insurance companies offer transactional technologies and APIs, allowing the insurance solutions to integrate with websites, mobile apps, and other partners' ecosystem. Most platforms prefer collaborating with external insurance companies rather than incorporating complex capabilities internally. Still, insurance companies often work with obsolete tech stacks, making the integration quite complex. On the other hand, embedded insurance infrastructure companies provide a hassle free way of connecting with the insurance companies with the help of tech stack. Fourth, embedded investments. Embedded investments enable the integration of stock market investing into their vertical offerings. API based brokerage firms have bought the trend of embedded investments. These firms have built API to reflect every microservice from funding, opening account, trading, portfolio management, and market data. This enables many platforms to offer investment services to their customers. Embedded investments permit the investors to invest in the stock market without leaving the platform, be it payment messaging or social. Some employee portals allow employees to buy stocks directly from the portal. Moving forward, what are the key players in the embedded finance ecosystem? First, enablers. Enablers are the tech or the fintech company that provides digital solutions and fintech development services to enable financial institutions to provide their services by plugging financial offerings into platforms to increase distribution and improve customer retention. The services are provided depending upon the pay per use, on demand, or hybrid services. Second, providers. Providers are the financial institutions such as banks that provide their financial products through API. They facilitate or enhance existing solutions with the help of technologies and framework. One such example is banking as a service, where financial institutions rent out their core banking infrastructure to power various fintech services and applications. Third, embedders. Embedders are the organization that create a link between the providers and the consumers through a platform to aggregate the financial services to such consumers and enable them to access numerous solutions in a frictionless manner. The most common example of embedders are the food delivery or cab services apps that allow customers to make payments without bothering to move to an external payment site, enter the account information. What are the areas with the most usage of embedded finance? First, B2B companies. MSMEs often face difficulties in getting short-term loans. This issue can be resolved with B2B e-commerce platforms which provide the buy now pay later feature to retailers during checkout. Second, accounting and khata apps. These apps provide cash advances and business loans to its SME and MSME customer base. Using these platforms, this enables small businesses to avail flexible in context credit from their accounting apps, which can be utilized for their business purposes. The embedded finance opens up alternative revenue streams and enhance customer acquisition and retention. Third, retail tech platforms. Retail tech platforms can use embedded finance to unlock alternate revenue sources and monetize their customer base. Both retail tech and embedded finance platforms can leverage a revenue share partnership to offer tailored credit to their customers. These revenue share partnerships introduces usage based revenue instead of subscription based revenue and significantly increase the growth of per user revenue. Fourth, logistic platforms. Logistic platforms use embedded finance by servicing truck drivers and trucking fleets and offering fuel and maintenance financing. This helps the partners to obtain funds during a crisis without relying on third parties. Fifth, worker aggregator companies. This includes ride sharing companies offering personalized loan to the driver partners by trip automation, driver ratings, and more. They can also help implement deduction of service strategies for collection. Sixth, business aggregator companies. The business aggregator companies like the food delivery apps use embedded finance to provide small sized loans to their partners to help improve their service level. Now let's discuss about the benefits of embedded finance for businesses. First, better customer retention. Many service providers seek a business that enhances their customer lifetime value and exceeds the customer acquisition cost. Embedded finance can be highly useful in this respect as it can enable companies to attract more customers and increase customer retention by providing convenient payment methods and other financial services. Second, accumulation and utilization of valuable data. The companies would be able to gather a wide range of data with the help of financial services. For instance, besides payment services, portfolio management services would help the companies to understand the asset status and employment status of the customer along with the medical history through the provision of insurance services. Optimum utilization of such accumulated data can lead to the formulation of plans that are in tune with the customer needs and facilitate accurate credit decisions and improved accuracy in recommending goods and services related to the company's core business. This further helps increase customer retention for businesses and companies in the long run. Third, increased revenue. Apart from strengthening the company's core business, embedded finance can contribute towards increasing revenue by integrating financial services into the current offerings of the business. The buy now pay later service can be expected to enhance revenue for over 50% of the embedded finance market by 2026. Fourth, low entry cost and rapid launch of services. The integration of financial services doesn't necessarily require businesses, infrastructure, and other elements, as most of it is handled by the in house and fintech companies, resulting in the reduction of the initial investment cost, and the funds can be utilized for the development and marketing of those products and services. The saved time can lead to an early launch of the product and services. I would be concluding the video by saying that the concept of embedded finance has witnessed significant growth in the recent years. It is considered the next wave of fintechs which can transform the financial ecosystem. Therefore, it can be quite beneficial for the companies to incorporate embedded finance to align with the evolving trends and enhance the growth of the business. That's all for the video. I hope that you found it informative. Kindly subscribe to the channel for more such content, and in case of any query, contact Enterslice.